Hi guys, and welcome to my channel where we talk about everything price action. In today's video, we're going to be talking about candlestick psychology. So yeah, let's get right into it. I'm assuming that you're not beginner or novice traders. So we all know what a candlestick should look like. The important piece of information from each and every candlestick is the size of the body and the wicks. Candlesticks don't work in isolation, right? A candlestick can tell you the market sentiment for that period in time. So if you're on a weekly, each and every candlestick tells you what's been happening for that week or the market sentiment for that week. But then a single candlestick, when you look at it relative to the candlesticks next to it, also taking into consideration the key levels, you get a more clear perspective of what's happening in the market and what's going to happen in the market in the long run, right? So the size of the body tells you a lot about the momentum and the strength of the market movers. So for example, in a buying trend, the size of the body will tell you if you're going to get a continuation of that buy momentum or that buying trend, or if you're in a starting phase of that buying trend, or if you're in a continuation of that buying trend, or if you should brace yourself for a reversal. And the most powerful signal you ever see for trend reversals is your wicks. So wicks tell you a lot about rejection. We're going to use that to analyze this pair. So anyways, I want us to look at this phase. We know that this is a consolidation phase. There's an impulse to the upside, there's a correction, there's an impulse, and then we got like a consolidation phase, and then we got a reversal. But I want you to understand the psychology behind every phase. The best way to understand the psychology of the market is to use a line chart, but in your own head. High time frames are very good indicators of where price is gonna go in the long run, because they give us an overview. They're like a summary of a week, like the summary of price action that's been happening for a while. So we're looking at this phase, and starting from this candlestick right here, we see that the market opened here, tried to go up, got rejected, so we went to the downside. Buyers couldn't sustain their gains, and then we closed here. Looking at this candlestick, we do agree that the overall sentiment, although we got a huge rejection, was bearish, right? And then we got rejection, or we got rejected here. The first thing we look at, this is the high, this is the low, this is the close, and this is the open. So this is the distance that price traveled overall. The body tells you about the strength of that sentiment. So right, the market opened, and let's assume that price tried to push lower, but then it couldn't push lower than, the previous week's low. And then we got a rejection, and then now price came here for a high and got rejection, yana, and then this is where we closed, right? So this week we were bullish, but we were not bullish enough to engulf the previous weeks. So the overall sentiment is still bearish. You know why? If this was an impulse move and this was a correction, obviously in the long run we were bound to expect movement to the downside, right? And then the next week we expect buyers to come in, or we expected them to come in, and then got rejected. Then we went up nyana. So the body of this is larger than this one, meaning that the bullish boys tried to come in, but they were not strong enough to push the market to the upside. So the sentiment is pretty much still bearish, but then for us to get a signal, we have to break this week's, the first week, we have to break this with a closed candlestick. So the same thing happened. The market now opened here. I do not want to draw all of this, but then the market came in here, and then we went here. So we engulfed the previous weeks, and then buyers couldn't break through this level. And now a small body represents indecision. So we closed here, and then, we opened here, couldn't break the previous week's high, and then we came back, and now we're indecision. Opened, and now we bearish, and then indecision, try to go bullish, and then bearish. So what we're seeing from this week's session, right, is that the market's coming down. Looking at the momentum here, one word was to say that this was an impulse move and now we correct it. But now the market is failing to push lower, or is failing to break this week's low, right? And now buyers are trying to come in, sellers are trying to push the market lower, but then buyers come. As that is happening, we see a lot of rejection on this level. So this was a week. And then the market, or the bears, tried to push, so they broke through, but then the bears couldn't hold on to their gains. So we ended up being bullish that week, right? That's the first rejection we got. And then sharp, bullish, but we couldn't break this week's high. So now the bears tried to come in again, broken through even this week's low, but then they couldn't hold on to the wins, because the bulls came in, and then we have right here, the market went back to this week's high. We closed, it was a high for that week, and then we are here, right? So now look at this pattern right here. We opened, right? And this was the high for the week, and this was the low for the week, and this was, right? So overall sentiment is bearish for that week. So now we go lower for that week, right? And then make a return to the upside. So people who are selling, this is my point, people who are selling here means that the next week or the following week, people try to sell again. This is what a signal, this is what a rejection candlestick signals. That's why I say it's a powerful reversal candlestick. People try to sell, but then they got to this price point here. And then the market went up, erasing the gains from this people and this people. So much so that people who experienced losses here and here, because of FOMO, they're going to take their L and join the buyers over here. One thing you should know about buyers and sellers in the market, especially the market makers, they try to gain value all the time. If, say, you were a buyer and you wanted to buy CAT JPY in that period of time, maybe you tried to buy here, but you didn't get enough support to push market above this high. And then this was the lowest you could go. Check the momentum for this week. This week, you got straight on buyers breaking through this week's high, and this high over here with a strong bullish candlestick. If the candlestick has a strong body and has no wicks, it symbolizes the fact that these people were agreeing on one movement or were agreeing on the same direction. The people who are buying and selling, people who closed their sells here and joined in the buys here, when it came to this week over here, they were all agreeing, okay, now, yeah, we give up. We are all bullish because there is no signal of no rejection. So they were all agreeing on one movement. And this is why the next week we still got a break from this high right here. We got a base tried to come in, got rejected, and then we pushed to this high over here. So if you see a strong body, that like a candlestick that has a large body relative to the candlesticks next to it, and has 0 to small wicks, it means for that specific time period, these people were agreeing on one movement. If you see a rejection, it means that, let's say it's a bearish rejection, it means that people who bought, people who sold from the previous weeks, let's say they were former traders here, né? They couldn't hold on to their wins. So much so that when people started buying here, where the institution started buying here, the people who had their gains erased from the market started to join these cats. And hence the following week, all of them, even the people who got their gains erased from this week and this week, started to join these people and were like, you know what, we agree with you. What happened this week, right? You could say that, yeah, they were in agreement because this candlestick completely engulfed this one and this one. But then what happened the following week? We tried to push to new highs, but then we got rejected, right? Meaning there's a significant price here because price has memory. Remember support and resistance. If you go to a lower time frame, you'll probably see minor support here, minor resistance here. So price couldn't break this point. So we went to the downside. And then now this candlestick does not engulf this one. So we're still in an indecision market. If we're closing and opening close to each other and it's compressed, it means there's no decision. If it happens for a prolonged period for more than 6 candlesticks, that's when you'll probably see a reversal. I hope I'm making sense. So we reach this resistance right here. And the people who agreed on this buy momentum are trying to get value again to add onto their buying positions. So that's why after every impulse movement, you get a correction. Why? The people who are in profit are trying to get value so that they can add positions. Think about it this way. If you had to run 20Ks, you will not run at the same pace. If let's say it was a marathon, you will most likely not run at the same pace. What you'll end up doing is you will run, take a breather, slow down your pace, and then you'll increase your pace again once you've gained enough energy or momentum. So this is what's happening here. These people were running, and then they got here. They were like, let's rest. If buyers are resting, who's going to come into the market? The bears. But then look at the size of the bodies of the bears. They're not strong relative to the buyers. So it means that there's a lot of indecision, although price is pushing lower, right? And this is why you get a correction looking like this. Remember the definition of a correction. It has weak movements and it's opposite the trend. So now you get to this price and then you remember, oh, the market once reversed here. So this is the lowest it could go. And then you get bears tried to come in, got rejected here, got their fingers burnt here, right? And then this bullish candlestick engulfed all of this price action here, which is a signal to the trader that the bulls are back, right? Indecision is not a reversal pattern, right? It's just that indecision. And then we got the bulls, and then we broke this level. And now we're here. So remember what resistance is. It's an area where we expect sellers to come in. Support is an area where we expect buyers to come in. So because we got sellers here, obviously we're going to expect sellers here. You see this rejection right here. It means that buyers tried to come in, push price high, but they couldn't hold on to their gains. And then sellers came in. But then what happened here? We couldn't get a continuation of that sell momentum. So much so because we were in an uptrend, right? So much so that the market even broke this resistance. And then we got a significant high here. This is a weekly chart. The higher the time frame, the more reliable this thing is, right? So now, let's look at the candlestick of the bulls compared to when the bull trend started. Do you see now that people aren't agreeing on the buy momentum anymore, right? You could argue that maybe it was a correction, but like the market was still making higher highs and higher lows until we got to a point where we couldn't make a new high. Why couldn't we make a new high? Because we weren't agreeing on the same direction anymore. So the same thing that happened here is now happening here, right? And now you have this point and this point. You failed to break this high, right? And you're coming back to this low. You eventually break this low, right? We're not convinced that we are reversing. And then you break this low. And look at the size of the candlesticks when you got a break. Look at this candlestick relative to 1, 2, 3, right? Broken this low. Look at this size of the candlestick when you got the low. When we broke the low. So this is a let me see what happened. Let me watch out moment. And similar to what happened here, when you see an impulse to any direction, you do not enter at the impulse. You wait for the market to reverse and gain value. And this is what happened. We got an impulse to the downside and the market went opposite or sideways to gain value until we came back to this high here and we found resistance. And then this rejection right here, right? And then we got a bull until like we broke this high. So probably using support and resistance. Please check out the other lessons if you still haven't. broke, right? Look at this candlestick right here. We come back and our opportunity is supposed to be here. The market has memory. Whenever the market comes back to these levels, right, remember there are orders there. So people have their buys here ready because the market remembers, okay, when the last time I reached this level, I bought. The last time I reached this level, I sold. We broke again, but then the market came back to this level and remembered, hey, the last time I came here, something happened, right? And we came back here because this is an impulse move, this is a correction. We gained value at a price point where the market remembered I turned. We broke, and we came back to a minor level. This looks significant when you go to a lower time frame. And then we sold, came back again to this point. And so what you need to know about candlesticks, right, is that they don't work in isolation, or they don't work alone. You can't get the full perspective of what the market is doing by looking at a single candlestick. You can't get full perspective of what's happening in the market when looking at candlesticks alone, right? So the market turned here, and it's a very drastic turn. Remember how we identify key levels? We look for points that stand out. The market came here again. We got a reversal, So what happened here? This is a point, this is a key level because it stands out, right? The market or the sellers try to push prices low, right? They try to push price low. And then they got here until here. And then now buyers from this level are trying to push price high, erasing the gains of the former traders. Former traders are now, because they're sustaining a huge loss, are like, let's join these people. What happened the following week? What happened the week after? We got buyers until we reached this point where the market has memory. So now you have to ask yourself, where the market turned the week of the low of that week, what's the memory of the market? What is the market saying about what happened there previously? And let's use a horizontal line. There were buyers here. So meaning the buyers from this few months, I think it's 2 or 3, came back again and pushed price high. And people who are former traders now were like, let me join into the buy. Obviously, if it broke through this level, we would expect a retest, but that's not what happened. Maybe this resistance was not strong enough to hold this. Remember what I said about major zones versus minor zones? It's most likely going, if you broke through a minor zone, right, and retested a major zone, when the market comes back to retest the minor zone, you're most likely going to get a break of that minor level. And this is what happened here. So people bought, but because of this long-term downtrend, we ended up breaking that minor level eventually. But then what happened here? Now we're trying to break through this, but then bears can't sustain their gains. They can't sustain their gains until they were in agreement. So now they were in agreement, they reached this point, they took a break. This is how you should think of it. Took a break. And then we finally broke through, and now we are buying, and we're in a buying trend. And it means that we should also highlight this level right here, right? And now we got buy momentum, the correction, meaning that we bought at a specific price, maybe this week's high. Now look at what the market is doing. We're in an impulse movement, right? Probably market's going to come here and reverse. So using support and resistance again. This is your high. No significant one. And this is your low. Right? And so you can use candlesticks to identify key levels also, because the market has memory. And now we are going on. So what I said about the range is that the market will go from the high and the low, right? And this is where we expect a trend reversal, unless the bull pressure is too much that it breaks. Like here, the bull pressure was too much that it eventually broke. This was our significant high, but then the bull pressure was too high that it eventually broke. So this is where the market had memory. So now you understand your psychology, but then you want to make sure that your charts are clear so that you understand, or so that you don't mess up. Like you don't have a mess of a chart and you don't understand what's going on. So if we were to get a correction, the first place where we expect the market to get value is this previous resistance. Now the market is going to retest it as support. If you don't get value there, the lowest that the market can go is this level. Hope you guys enjoyed it. Till we meet again. Peace.